Hello and welcome back to Bunnex Investment Group. In this video, we are going to be talking about a simple strategy that has the potential to give you 50 pips per day, provided you trade it on several pairs. So there's a popular saying that says, everything that goes up will definitely come down. It's the concept where this strategy is derived from. But before we jump into the whole video, please make sure you check out our free Telegram channel where we share free educational content, signals, as well as advice. The link is right in the description box below. So without wasting much of your time, let's actually jump into this particular strategy. So the first thing that you need to do is to see a long sustained run within a day. It will be observed on M15 time frame, and after every long sustained run, we definitely look to get a reversal, which is basically derived from what goes up will definitely come down. So let's say this is a day start, and then another day. The low of this day has actually been issued at this point, and then the market will give us a long sustained run going up. So at the end of this long sustained run, we expect to see a terminating peak or a terminating pattern. So this pattern is an M or a W depending on the direction of the long sustained run. In this case, we had an upward move. Therefore, we are now looking to see a reversal of this long sustained run, and that will be basically an M, like that. So this M will be traded after a candle closes below the 13 EMA, and the target will be on the 200 EMA. So in another example where we have a long sustained run in an opposite direction, we have a long sustained run. In this case, it's actually going down. Therefore, we now expect an upward terminating pattern, which is a W. So usually these patterns will actually occur within the US session, or one leg will occur in the US session and the other in the Asian session. After that, we enter after candlestick closes above the 13 EMA, and our target will be on the 200 EMA. So we will need the 13 EMA, the 200 EMA, and of course we might need the 50 EMA to help us in our trading. So without wasting much of your time, let's jump on the charts so that you'd see how this can be applied in real markets. So this is euro against dollar, and on this pair, the first thing that we need to see is to see a sustained run and a pattern in the opposite direction to that sustained run, right? So in this case, we can see that we had the low of day that was issued at this point. Then we had a long sustained run, and then at the end of that long sustained run, we had this terminating pattern, which had the first leg at this point and then the other leg at this point. Unfortunately, the market gapped, but if you were viewing with another broker, they may have displayed candlesticks within this flow, and our entry was definitely going to be, in this case, we will say our entry was at closer of the candlestick below the 13 EMA, and our target at the 200 EMA, like that. Then after that, we can see that this became the high of day, right? This was now the high of our day, or we may say the high was now at this point of this particular day. We had our sustained run going down, and we had to see a terminating peak against this particular sustained run, which becomes a W pattern. And the W pattern was issued, and entry was to be made above when candle closed above the 13 EMA, right? And then the low of day for this new day that we still can see is this one, right? From that low, we had a long sustained run, and we were expecting to see an M that is against this upward long sustained run, and an M was issued. It's unfortunate that this M could have not give us a proper entry point, since this was now a vector going downwards. We had to find an entry point up here so that our target will be on the 200 EMA. So that's basically that you'll be doing. You'll be going against the first issued sustained run within a particular day. You need to see the high or low of a day, and then see a long sustained run. Then at the end of that long sustained run, which we do not know exactly, that is why we need to find a nameable pattern, an M or W, and then we would know that we have ended that long sustained run. Then enter, and after that entry, our first target will be on the 200 EMA. So that's basically the 50 pips per day strategy. You will need to backtest, as I always say. Backtest it on several pairs to see if you can trade this properly, as well as you can catch these M's and W's against the long sustained run. On that note, we come to the end of this video. Share with someone, and if you haven't done so, subscribe to this channel so that you will not miss any of our new content to be released. Have a blessed day.